Hello, welcome back to WinFX Trading YouTube channel. This is the only channel that has been optimized to make you rich trading the forex synthetic market. If this is your first time of visiting my channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. And try to refer your network to this channel. Try to like, comment, and share so that YouTube pushes to a high level of audience. Okay. In today's video, we shall discuss about moving average trading secret applied to synthetic softwares. What they did not tell you. Okay. Now, I'm going to show you a few points about moving average. Number one is relative strength. Number two is indicator just indicates trend direction, but cannot tell you signal direction. Indicator signal are sometimes false, hence cannot give you let's put it this way, cannot give one statistical edge. Okay, indicators lag. They lag behind the price. Market structure, price action analysis is needed to get the right signal. Are you getting it? Right now, I'm going to show you certain things you need to know. In the case of lagging, let me show you something because I need to explain this lagging. You can see this is volatility 50 index, and currently there is a kind of momentum. The price move with a big momentum, you know, in the shortest possible time. It took basically 1, 2, 3, 4, 5, 6 minutes to create a peak level of 1.12 1.12, and right now the market is taking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's taking about 12 candles to reverse the whole process. And as I'm telling you, if you calculate the peep in the reverse part, it's not even up to 1 peep. Okay, that is to tell you that this market actually moved with high momentum in the forward part, like from here to here was very huge momentum. Now, the indicator lag, and as a result, you cannot even be able to predict this price. Now, the lagging is when this thing is happening, when this market starts moving with high momentum here along this path, when it start moving with high momentum along this path, okay, see the path along this path, then you discover that this indicator moving average, this moving average 20, this green indicator line, which is moving average 20, is somewhere here. And when it is somewhere here, you notice that you'll be like, okay, because it's here, I'm going to sell. Then you will sell. It will sell because you see the price is below the moving average. Then when price is below the moving average, it is indicating selling. Now you will sell. Then what happened? The market struggled to sell, but it couldn't sell. Then you see, it start buying. That is what we mean by lagging. Indicator cannot tell you the signal. Rather, it will give you an insight of the direction. Now, knowing the trend direction is different from knowing the signal direction. They are not. They are two different things. Like now, currently the price action is below moving average 20. Now, do you know that as it is below this moving average 20, it can suddenly go up. Now, if it goes up, then it will become a buy signal. But the general convention says that when price action is below the moving average 20, or any moving average at all, below moving average is it can be any period. When price action is below it, then you look for sell. But I'm telling you the truth, because of the lagging behavior of indicators, they are not. It's not going to show you what you think. It will show you the opposite. At times, it will show you what you think. But when there is no consistency in trading, then you have a negative statistical edge. So if indicator make you to succeed today and make you to lose tomorrow, you are going nowhere. Are you getting it? So that is what I mean by lagging. Okay, I'm not going to go deep into mathematical definition of moving average because you don't need it. But the descriptions, the explanation I'm giving you is what you need. Okay. Now let me talk about other things like strength, relative strength. I will also talk about market structure and price action analysis. So we are going to be going to higher time frame, like let's use the hash for the dailies. You can use any time frame that is convenient with you. Okay, you can actually use any time frame that is convenient with you to do the analysis. Okay, now before I continue, I've told you that indicator cannot provide signal. They show direction. Now, whenever price is above both moving average 20 and 200, it means that the market is trending up. Simple. You can see in the daily, it's trending up. And whenever price is below the moving average 20 and 200, it means that the market is trending downwards. All these indications, all these things that is showing you is not going to give you the price to buy or sell. No, it's not. What will give you the price to buy or sell is the ability to know the market structure and price action. Okay, but there are ways that you can make use of moving average. Like there are ways you can make use of moving average to succeed in the market. Let me go to hedge fund and show you some things. There are ways you can make use of moving average. If you combine it with price action, it will work much better than when you are trying to use it alone. Okay. Right now, we notice that for volatility 50 index, we notice that uh, once the price break above moving average 220 here, the market starts respecting the moving average. First of all, it break like this and retest. Now, if you want to if you want to know whether the indicator is going to show you some signal combined with structure, you need to look at relative strength. This uh this is where the two moving average cross. Okay, because you have to first of all confirm that the moving average has crossed, and then you have to consider whether it is the prices are below or above the moving average. So here the price is above the moving average. Okay, that is showing buy signals. It like is indicating uptrend, is trying to tell you to look for buy signal, but that is wrong. You see, if it shows you uptrend, that does not mean you will buy and succeed. No, you have to do price action analysis. Moving average can show uptrend, yet you will not see a buy signal. It can show down trend, yet you will not see a sell signal. All you need is to do your price action analysis. So I'm talking about strength now because it will help us to know strength. It shows strength in markets. Okay. So now if you look at here, after the crossing, this is the crossing. Then you see how the price move up. Okay. How the price move up. This is hash 4. If you check the price after the crossing, the price move up like this, and then it retests the moving average. Okay. Now, if you look at this distance, is a very big distance. It shows that the market is really ready to go up. The distance, if you look at this is a very big distance. If you go to lower time frame, you know that it's a big distance. It's bigger compared to this one. I getting this distance. It's bigger compared to this distance. Okay. And that is why when the price cross over, like when the price remain above moving average 220 here, it did not respect it. It rather break it down. You see, the price break. A lot of people will buy here, but it will not work because the strength this crossing is showing, the strength the price is showing with respect to the moving average is low. So when the price break over the moving average. When the moving average cross and price starts either going like either moving above or below them, consider the distance of the breakout with respect to the moving average. If it is a small distance, then the strength is low. The strength of that price movement is low, and therefore you have to stay away. But if it is a longer distance, then the strength is big. Okay. Uh, take for instance, there is another cross here. You notice that this moving average cross from above, and then it crossed from above. Okay. Then the prices remain below the moving averages, and then we will expect sell signal. Okay. Now, if you have this, that's why I tell you that it will not provide signal. If you look at this, the the distance between this, the moving average, and where the price, the highest point the price have reached, which is this one, the distance is small. Okay, it's small. If you look at the distance, is small. If you check here, is not big. Okay, now that's why when price retests the moving average 200, okay, it sold a little bit and start buying. So there is a low strength. Okay, now somebody will ask, how do we know the strength? Is it from moving average 20 or 200? You use moving average 200 to understand the strength, not moving average 20. Okay, yes, there is strength. We can talk about strength with respect to moving average 20 when we are talking about entry, because most times you make your entry using moving average 20. Okay, I will talk more about that. So we are considering the distance between where the price is and the moving average 200. Okay, so now when these two moving average cross, when the moving average 20 cross the moving average 200 from below, you notice that the price starts going above the moving average 220. Now, this presents a very strong strength. It shows that this trend is very strong. This uptrend is very strong. But see what happened when price retests moving average 200. We expect an impulsive move because the strength is big, because the distance between how far the price have moved relative to the moving average 200 is big, and then we expect a big impulsive move that will take out this high. But what happened? It didn't happen. We're expecting buy signal here, but it didn't happen. When price came near moving average 200, it break the moving average 200 and retest it, and then it becomes a sell signal. The selling continues. You see, in market, your ability to be unique, your ability to know whether to buy or to sell, and not to do both, is what makes you to have a positive status quo edge. You must be unique. Don't buy and sell at the same on the same market unless the structure and the price action tells you. What I'm trying to say, you have to say, okay, this is what I'm looking for. I'm looking for buy. And what makes you to say that you're looking for buy is because you have already know that it must happen like that. So, okay. Now, there's something I'm going to talk about, response time. The response power or response time. You see, the moving average, any moving average that is from 50 to 20, or any moving average that is from 50 to 1 has high response time compared to moving averages from above 50 to 200. Above 50 to 200. What he's trying to tell you here is moving average 20 responds to price faster than moving average 200. So if If two moving averages crosses and the price starts moving with relative to them, let's say for instance it crosses up here, it crosses from below then to up, and price start moving relative to those moving averages. It respects, like it react mostly to the lower moving average, which is moving average 20. In that case, you can make entry after some retest. Like this is the first retest to moving average 20, then a break of structure, and then retest to moving average 20, and then to the structure, and then in that case you are going to buy. I'm telling you the truth. You are not going to be waiting for it to come to moving average 200, because this moving average 200 have a low response time. Before price will react to it, it will take time. Okay, so maybe you can you can take a trade, like you can take a trade in the direction of the trend if price have retested moving average 200 a third time. Maybe the first one you may not believe, second one you feel like it is going to work, then the third one you have to take the trade. Okay, let me show you why. You see, the first retest to a moving average might be a fake out, might be a false signal. So you wait for break of structure, which happened here. So this is a confirmation. This is a little bit confirmation, and the market retested the structure and also retested the moving average. Then you can enter here. Okay, you can actually enter here. Yes, okay. You just enter on the second retest. It makes sense that if the first retest successfully lead to break of structure, then the second one will hold. Because most of the time, if you are waiting for third one, they usually lead to another reversal, and then you just miss out. Okay, like this one, you discover that price reacts to the moving average a little bit and reacts to the structure and then push, and then on coming back to the structure, it gives us a little buy. If you stretch well, a little buy, some little buy with lower lows, lower highs. That shows the trend is changing. Lower highs, and boom, what happened? Trend change. Okay, the trend change automatically. It's not that moving average 200 cannot provide signal. It can provide, moving average 200 can actually provide signal. Okay, it can provide signal, but not all the time. It provides signal at higher time frame. Like it will take a lot. It mostly provides signal at higher time frame, and it takes a lot of time to provide the signal. Okay, it takes a lot of time to provide. Let me show you an example. Um, right here, you see a market that are broken, like the moving average have crossed here, and price started moving relative with moving average 200, and then it retests moving average after it breaks on structure, a break, retest structure and pull, and then retest again and break. The next place it came to is moving average 200. So here, after you confirm that it's respecting it, then you can buy here. This is uptrend because the market is above. You can buy here and catch this. Let's talk about downtrend one. You see a price, you see where moving averages cross, the two moving averages cross here, and they start moving relative to moving average 200, and also it depends. It depends. This time around, it tends to move somehow relative to moving average 200, but it's also cutting moving average 20. You notice here, market start breaking structure a little bit, but it's ranging. It's not all that serious, ranging, and then it break this structure, it break here and retest. So you notice that the price is actually um, retesting the moving average 20. So you can actually use moving average 20 to sell, after some after the first break. This break is not all that strong. So this is the first break and then a retest, so you sell. Okay. You see, that was a massive sell. Okay. And uh that is it. So when price finally retests moving average 200, you notice that they didn't respect it. It just break it. So you always use structure analysis. If we stretch this, at least you have to wait for this candle to open and close. And when it open above this structure, you know that it's going up. I've talked about opening and closing price, how they affect signals. You can go and watch the video. You can go and watch the video. Search about it. I may not drop the link in the description of this video, but go and search about it. Search about opening price and closing price by WINFX trading. Okay, but one thing is so clear and so like rampant in the forex or synthetic market or in financial industry, you know. And what it is several videos on the YouTube or other social media, have been bringing one strategy or upon one strategy upon another strategy, one indicator to one robot, uh, you know, to even some signal group or signals channels, as a way to reduce losses, as a way to make money in the system. But I'm telling you the truth. See, if you really want to start doing well in your account building, like if you want to build your forex account, I have a few things I want to tell you right now. See, if you really want to make it in this market, make sure you obey these few instructions. Okay, you need the right method. Number one, you can't follow a blind man and succeed. If you follow a blind man, both of you will fall inside a pit. Now, let me give you the secret. You see, it's not that good things that doesn't exist in this world. It's not that good things doesn't, they do exist, but it's hard to be found. If you see any channel that doesn't have much subscriber, fear that channel. It's that channel that will save you. Are you getting it? If you see any YouTube channel that doesn't have much subscriber, know that that person is saying the truth. Only that YouTube don't want to push the person. So what I'm trying to tell you now is try to join my VIP. It's not costly. You put money like $1,000, you lose. You put money like $10,000, you lose. Join my VIP. You will not lose again. Another thing is, if you are the type that you say, okay, I've joined a lot of VIP, I've lost money with them. Let me tell you the truth. If I coach you on this market, like I have courses that I render. I have about 8 courses. We have M5 drop course where we teach people how to take $1 to $6,000 plus in 5 days. We have drop buy enough where we teach people how to take $1 to $11,000 plus in 14 days. We have boom and crash courses, boom and crash millionaire course. We have volatility 75 millionaire course. We give you the secret, the hidden facts that will help you to succeed. Okay, you need a lifestyle. Trading is not something that you wake up and look on the chart and start trading. You need to learn from people's experience. In fact, one of the things that will help you to improve in your trading is that if you're able to buy my course, I will respond to any question you ask. You ask me, that is bothering you about trading. I will also involve you in my YouTube live, so that once you show me the certificate or purchase of my course, it could be you show me a screenshot or a kind of something that show that you bought the course, maybe the video you watch or the ebooks that I gave you. Then I will like go live with you, like uh among other people that actually buy the course. You will go live with me to see my day-to-day analysis on the chart. That is lifestyle. You become my disciple. I disciple you to become successful. Okay, I'll be ending this video. Join the VIP, enroll for the courses, change your life, and become rich. Bye for now.